What's going on, you guys? This video is a clip from a recent Trading Mentorship Group session where I'm going over the importance of qualifying the pullback that you're getting involved with. I'm seeing way too many traders get involved on very, very shallow pullbacks that ultimately just get run over, meaning they end up in losses. These are trades that are not working. And in my opinion, they are setups that are pretty easy to avoid. So if you find yourself getting caught in very shallow pullbacks, whether it be long or short, this video is going to help you qualify the pullback, make sure it's actually going to be a valid setup to be getting involved with. These are topics that we talk about frequently in the weekly trading mentorship group call that we have. If you guys don't know who I am, my name is Kyle. I'm a full-time futures trader, been in the game for about 10 years now. I'm also the founder of Opinicus. Hope you get some value from this video. If you do, please drop a like and subscribe to the channel. Hope you enjoy. In a prior TMG, they're not going to give you an entry, it just pushes. Now, can you take a shallow pullback? I mean, that's not going to be my play, right? I'd rather just let this go. I'd rather let it go. I don't like to be in the habit of taking shallow pullbacks, which kind of leads me into really quick, just an aside. Shallow pullbacks, you have to have some awareness about shallow pullbacks. If price is just giving you a little blip above a level, and we had a recent one that caught a lot of traders. I think it was, let me just really quick see if I can find this. It may have been over here. I remember it being with 19,600. But what I mean is, price may be breaking above the level of interest, right? You have a push above, and the next bar or two is overlapping. We're not calling that a pullback. We're definitely not calling that a pullback, because to have a pullback, you need a real extension above. So if you find yourself getting caught in these trades, just make sure you tag it in your results. It's not an actual pullback right there. So you may be thinking, well, I'm doing everything right. I'm involved at levels of interest, this, that, and the other, and the setup is not working. This right here is just not, it's not a valid pullback whatsoever. We need a real extension move up above the level and then a retracement. And so then the question becomes, how do we actually objectively define the retracement? And one of the easiest things to do is just use, are we even at the shallow fib, right? So if we took a fib, are we even seeing price pull back into the shallow fib? And if not, then you probably don't have a real pullback. I think it may have been over here this morning from Monday that caught some traders that I spoke with, like another sort of lockout push. Yeah, this was it, because we had some of the team had some longs through here, and then it pretty much leaves everyone behind. If you're not in from lower, you think this is a little pullback. This is not a pullback. This is not a pullback. There's not an entry there. There's not an entry there. So if you see something on the micro time frame and you're getting in, just understand what you're getting involved with, right? If you're looking at a 30-second chart and you're like, oh, it's pulling back to the level of interest, I'm going to try a little piece right there. Know that you're getting involved with like a much lower quality setup. Ideally, just do it with lighter size, or just avoid it. Avoid it. So just a quick aside on the actual quality of the pullback and how we're actually defining a pullback in those scenarios. Little barcode action, some overlapping bars, some overlapping candlesticks. We're not calling that a pullback, right? And so as it's kind of like, just to drive this home, even ES today, okay, right over here, price breaks above 56.75, you get the pullback. Too shallow. It's too shallow. How can we decide for sure? All right, shallow fib. Is it even into the 23% fib retracement? No, not even close. Okay, it's probably too shallow. Probably too shallow. So it's prone to failure. Prone to failure. Hope that's making sense, because I'm seeing a lot of losses in my messages from setups like that. That one is easily avoidable. We need more depth. We need more of a retracement. We need a deeper pullback, or just a larger extension above the level of interest. So getting back into NQ, it marks a high. Now, what is interesting about this is, you may miss this entire move. Speaking of pullbacks, even more, you may miss this entire move. You're like, all right, I'll get it on a pullback. We have our fibs drawn. Let's bring that into view. So the fibs are drawn. We get into that first shallow fib. There's no other reference point or anything here, right? It's just the fib. Again, pretty easy to pass on this one. But even more importantly than just passing on strictly a fib is, let's bring it back to the higher time frame analysis. We're starting to get onto the backside of this move, right? 15-minute exhaustion bar at 11:15. That means this bar closes at 11:30. So any entry after 11:30, we know that we're going to be fighting this exhaustion bar. And we should probably just wait. If you're trying to grab longs, wait for something like this. This is what I had mentioned in the main chat. If you were there kind of around lunch hour, I was like, all right, start to keep an eye on the 15-minute, because we actually had some clues that buyers were stepping back in. So keep that in mind, when price is on that kind of backside of the move and you're looking for an entry, just keep an eye on the 15-minute. Like, am I fighting a big exhaustion bar here, especially after 5, 6 consecutive green bars in a row? And that'll help to avoid entries like this. Because number one, we only have a shallow fib, so it's going to be a lower quality setup anyway. And then we're fighting that 15-minute exhaustion bar. So most likely, what's our best scenario? Well, wait for 20K and then the fib buy zone.